Everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're assessing the financial sector, XLF, and some individual tickers within this ETF that I think are worth noting because there are going to be some opportunities on the trading side to make a little bit of money here. So starting with the XLF Analytics here, the daily chart overall Friday session last week was a positive session for financials. Financials ended up closing the week very, very strong. And really, if you look at the trend, financials has just been grinding higher since it had this couple week pullback. It's really pretty much recaptured this entire pullback in the trend, which does suggest that financials actually want to probably push higher in the near term. Of course, there's still a lot of potential market moving events that we're moving into this week with Powell speaking on Tuesday, PPI Tuesday, CPI Wednesday. That's going to be extremely market moving for interest rates and financials. But overall, if financials can work itself through this recent pivot high, it does appear that we want to have an upside move all the way up into this 43.50, maybe 43.60 zone. And that's looking at a monthly chart resistance going all the way back to 1999 pivot through this previous 2006-2007 pivot highs, right through this pivot high in 2022. That's how we're getting that upside resistance target. Now, are the financials extended in nature? Yes. Is the weekly RSI bouncing here and could it make a new high? Absolutely. But right now, if you get rejected at this next yellow key moving average on the weekly RSI sitting at 73.26, that could be your next rejection point. That could coincide with a peekaboo new all-time high. And there's some interesting charts setting up in the financial space, some interesting opportunities here. I mean, when you look at these stocks, not only on a weekly basis, like something like Goldman Sachs, GS, again, not only on a weekly basis is it extended beautifully 1, 2, 3 weekly bar surge off of a massive gap up. But look at this monthly chart. 1, 2, 3, 4, 5, 6, 7 consecutive months of upside in a row. And this is hitting now a trend line going all the way back to 2007 pivot high, your 2021 pivot. Very, very extended in nature. I do think this one likely sees a pullback. What's interesting, on Friday, it hit that technical trend line. It actually pierced it and ended up seeing a bit of a reversal. So that's obviously acting as some near-term resistance now. And on the monthly chart, it really doesn't even look like you had a daily pullback on Friday. Then we move along. We look at American Express, AXP. That's another very, very interesting chart from my point of view. Why is that? Well, simply looking at this beautiful parallel channel, connecting your pivot low in COVID, your 2020, to your pivot here in 2023, to your pivot high. Look at what we're now trading into. This is 1, 2, 3, 4, 5, 6, 7 consecutive months of upside. Very, very extended in nature. You are putting in a weekly negative divergence as well as a daily negative divergence. So you just want to be mindful of AXP in this area. It is looking like more of a potential short setup in my opinion. So, I mean, to overall summarize things, there's a lot of interesting charts here that are shaping up, in my opinion, for potentially a little bit of a pullback. One other one is WFC, Wells Fargo. Really, the monthly chart setup is very, very interesting itself. It's triggered this beautiful monthly inverse head and shoulders, which does point to more upside. Okay, which actually this inverse head and shoulders on the monthly chart gives you an upside of about $94. Now, obviously, you're at 61, so there's still a fair bit of upside left in the tank. But the question is, does this continue its bull market run after you've had 1, 2, 3, 4, 5, 6, another 7 consecutive months of upside in a row? This is the question you have to ask yourself. Heading into the CPI, heading to the PPI, a lot of these rate-sensitive stocks, are they going to be able to sustain this rally? Even if, let's say, CPI comes in soft, interest rates fall, are these companies still in a situation where they're going to continue to grind higher in the near term after having, 7 consecutive months? Now, the opposite's true. There's a lot of interesting setups as well that could be coming into fruition on the bull side for these names, but the charts that I showed you are definitely looking like a little bit of a pullback is due and likely in the near term. If you found this analysis helpful, please check out my website in the link below. Take care, everybody, and we'll see you on the charts a bit later.